Finance keys. You get paid on Friday, open your bank app, and suddenly money is moving in 3 directions at once. Rent is due, your card gets declined for coffee, and you realize you do not actually know what a checking account is supposed to do. A lot of young adults think a checking account is just the place where money sits. It is more useful than that. It is your day-to-day money hub, and if you do not understand that early, simple money decisions start feeling way more chaotic than they need to. A checking account is the account built for everyday money movement. It is where paychecks usually land, where debit card purchases pull from, where bills get paid, and where transfers in and out happen fast. It is not designed to make your money grow very much. It is designed to help your regular financial life function smoothly. Once you understand that job clearly, a lot of other money decisions start making more sense. Think of your financial life like a small system with different jobs. A checking account is the operating account. It handles motion. Your savings account is for money you want to protect from impulse spending. Your credit card, if you use one, is a borrowing tool that creates a bill you have to repay. The checking account sits in the middle of all of that because it is usually the account connected to your paycheck, your debit card, your bill payments, and your transfers. That's why people often get into trouble when they treat checking like a storage account instead of a movement account. If every dollar you own stays in checking all month, the account can look bigger than the amount that is actually safe to spend. The money may already have a job. Part of it may be for rent, insurance, subscriptions, groceries, or a payment that has not cleared yet. So the smartest way to look at checking is not how much do I have, but how much of this balance is truly available for today. Banks also use checking accounts as the basic identity layer for your money life. Your account and routing numbers let employers pay you, apps connect to your bank, and automatic payments know where to pull from. That convenience is powerful, but it also means mistakes happen fast. Overdraft fees, failed payments, and accidental overspending usually start with misunderstanding the checking account's role. Imagine a 20-year-old named Maya getting her first real paycheck from a retail job. She sees $1,240 hit her checking account and immediately feels relief. Then, over the next 4 days, she taps her debit card for food, sends money to a friend, pays her phone bill, and forgets that her streaming subscriptions and car insurance are still scheduled. By Tuesday, her balance looks much smaller than she expected, and it feels like the money disappeared. Her checking account was doing exactly what it is built to do, moving money quickly as different parts of life asked for it. The lesson is not that Maya is bad with money. The lesson is that checking accounts create speed. Speed is useful when you understand it, but stressful when you do not. Once Maya starts treating checking as a command center instead of a wallet with no plan, the whole experience becomes less emotional and more manageable. Picture 2 clear paths leading the same paycheck. On one path, the full paycheck lands in checking and gets spent from casually, one tap at a time, until important bills start racing the remaining balance. On the other path, the paycheck lands in checking, but almost immediately some money gets routed with intention. Bills stay visible, a small amount moves to savings, and the rest becomes the amount available for everyday spending. Same paycheck, same person, different system. The checking account is the intersection where those 2 paths split. Another way to see it is like a train station board. Your checking account is not the destination. It is the platform where money arrives and then leaves for specific places. If you stand at the platform and assume every train is yours to board, you create confusion. If you read the schedule, the station becomes useful. First, know exactly what usually flows through your checking account each month. Paycheck deposits, rent, subscriptions, loan payments, food spending, transfers, and cash withdrawals. Second, keep a buffer, so one forgotten payment does not throw the whole account into panic. Third, turn on alerts for low balance, large transactions, and direct deposits, so the account talks back before a problem gets expensive. Fourth, separate safe to spend from sitting in the account by keeping a simple list of upcoming bills or by moving savings out quickly. Fifth, review your account at least twice a week while you're still learning. You are not checking because you're paranoid. You are checking because clarity reduces stress. If money has felt confusing, this is one of the first places to get power back. You do not need to know everything about investing, taxes, or credit this week. You just need to understand the job of the account you use the most. A checking account can either feel like random motion or like a system you control. Ask yourself, when money lands in my account, do I already know what each part of it needs to do? That one question can change the way your entire month feels. If this helped, subscribe to Finance Keys, drop one money question you want answered next, and share this with a friend starting adult life. Checking account banking basics, first paycheck, personal finance for beginners, money basics, Finance Keys.